benefits to investing into multifamily real estate? What is multifamily real estate? Watch this video to find out more. Hello and welcome back to another video with Mind Money Masters. Today we're going to talk about multifamily real estate and discuss the true advantages and disadvantages. There's a lot of value packed into this video, so make sure you stay until the end. Don't forget to subscribe to my channel and turn on that bell for notifications. Also, if you are looking for ways to get started in online business, don't forget to check out that description section on this video for some tips and tricks on starting an online business. Also, as a disclaimer, I am not suggesting any particular investment strategy. Please work with your financial advisor or professional advisor before making any investment decisions. I truly love this quote by Theodore Roosevelt. Every person who invests in well-selected real estate in a growing section of a prosperous community adopts the surest and safest method of becoming independent, for real estate is the basis of wealth. What do you think about that? Are you interested at all in real estate investing? Hopefully you would be if you're watching this video, but if you have some residential properties, maybe it's time to break into some multifamily properties. Even if you haven't started investing, you can still get into multifamily real estate. You don't have to start with residential first. There are a few benefits in apartment complexes. Let's get started. So, why multifamily real estate? First, what do I mean by multifamily real estate? A multifamily investment property is a property in which there are multiple homes within one building. For example, apartment complexes, duplexes, triplexes. Effectively, the size of these investments can vary. Multifamily real estate properties can become very lucrative. Everything is based on the number of doors. So apartment complexes, if you look at when they talk about the jargon, a duplex obviously is 2 doors, triplex is 3 doors, apartment complexes can be 4 doors and up. Typically, they can either be classified by small investments, which are usually the 2 to 4 residential units, and large, which have more than 5 family units. It is a way to avoid the stock, or actually you can avoid the volatility of the stock market for sure, but it's also a way to diversify out of the stock market. You know, I talk a lot about stock market investing on my channel, but specifically, real estate is a way to diversify out of the stock market and have different risks that also need to be managed. So it's not, obviously nothing out there is risk-free. Real estate has its own risks, but you can diversify some of that risk through property manager and leasing agency. So you should definitely use a property manager and a leasing agency for this type of investment. It may be a little bit different if you have a residential property, if you want to be the landlord particular of that. I would actually strongly encourage you to use a property manager and a leasing agency for all types of real estate investing. Here we go. Now, the advantages of multifamily real estate. This type of property is one of the better strategies for real estate investing and will typically earn a higher ROI, or return on investment, than a single occupancy property, so like a normal residential property. This is because there's more security with multiple tenants, and the property will generally be better at producing a positive cash flow. The secret is to monitor occupancy and vacancy rates. Empty units produce no income, obviously, and they also drag down the results of the whole property. Appraisals in multifamily real estate is a lot different than appraisals with a single family home. The appraisal based upon commercial or multifamily real estate is based upon your occupancy rate, your investment cash flow is really how they rate and appraise these type of properties. Now, when renting out single occupancy properties, very easy to move from 0 vacancy to 100% vacancy. However, it is very unusual for the landlord of a property with multiple tenants to have 100% vacancies. I mean, it depends on the size too, but in general, this is true. So even with a couple of vacancies, the landlord will still be making some money. So you got to think about that. So say if your investment per month is $2,000 on your mortgage for this particular property. However, you've got 4 tenants that are 4 doors that are paying you $1,000 each. That's $4,000 minus your mortgage of $2,000. You're just netting $2,000. So it's a far more secure situation. In a market with high demand for property, this will result in a higher occupancy rate. This will increase the ROI of the investment, and this kind of market is particularly advantageous, one for investors in multifamily real estate investments. So, experience has shown that it is typically easier to obtain finance for multifamily real estate investing than a single family home, as the lender has expectations of a positive cash flow. So if you already know, and also if you're working with a leasing agency and they have tenants on the hook already, you already have a, not guaranteed, but at least a projected cash flow for the property. Obtaining insurance for multiple residential properties is also cheaper than obtaining individual policies for each family unit within a property. Most investors tend to focus on the purchase of single-family homes. You see that all the time. In the HGTV channel, basically, it tells you how to flip a property, how to do this. Not many people go into the multifamily real estate. So it's almost like a little hidden gem in the real estate investing side. Consequently, when a property comes on the market, there may be several investors interested in the property of a single-family home. Far fewer people invest in multifamily real estate. And as an investor, you may have a greater chance of successfully buying the property that you're interested in. This also has an impact on the financing. So since fewer competitors will be seeking finance, thus the process is a little bit simpler. Now, conversely, disadvantages of multifamily real estate. You didn't think I was going to have a little love fest here for multifamily real estate. Even though I do love multifamily real estate, there are some disadvantages. Because you are investing in a property with multiple tenants, there is work involved. Instead of one tenant contacting you, there may be many. If you're attempting to manage the property yourself, this could be very, very difficult. Once again, needing the property management, which could potentially cut into your profits. Handling multiple tenants and dealing with rent collection, resolving problems may not suit everyone. I personally would not encourage it. So in this scenario, many investors choose to employ professional property managers. Now, this of course comes at a cost, and it will cut into your profits. But, if an investor is seeking to grow a large portfolio quickly, purchasing investment properties that are multi-occupancy is much faster than buying single properties, one by one, all over the city. It's very, very tedious and time-consuming. Many very successful investors, though, have built substantial profits this way. Now, however, as we said at the beginning, no one strategy fits all situations, and this route may not be one for investors' every temperament. So just kind of remember of the nuances here. Financing might be easier, that's an advantage. However, you've got multiple different tenants, personalities, you've got more people that you're working with, more things that you have to potentially deal with, and the property manager may not cover everything. So you got to make sure that you have a good property manager and you have a good leasing agency that can help you fill any vacancies. Now, of course, my final take, as I do with all my videos here. I think investing in multifamily real estate has more advantages than disadvantages. I do have a post in my blog that I'll leave on the description that talks about strategies for real estate. This is just a blog post, and it typically covers more of a residential real estate strategy. But, this is going to be a little bit more complex. In general, the apartment buying is going to be a little bit more complex than single-family homes. But there is less competition, it is easier to find financing, cheaper to insure, and it is more secure, or at least more diversified from a risk perspective, because you have multiple tenants paying the bill. You could certainly get a higher return on investment compared to a single occupancy investment. There could be more stress, though, dealing with multiple tenants. Now, again, strongly encourage professional property management company. They will take care of the day-to-day management of your investment property. They don't have to worry about day-to-day stuff. You don't have to go at 2 o'clock in the morning and fix a toilet. You really, as your portfolio grows as an investor, you have to take advantage of a property manager, because it's no way to scale it if you don't. So the very interesting thing about multifamily real estate, though, is that you don't have to buy a 400-unit high-rise that basically you see a lot out there. I know a lot of investors that are into multifamily units that are 2 to 4 doors. Duplexes, triplexes, they're great ways to get started in this investing strategy. And most of them typically don't cost more than an actual home costs. It's just laid out differently. So maybe that's something, you think about. And honestly, if you're first starting out, maybe you buy a duplex and you live there on one side, and then you rent out the other side. You get free mortgage. Basically, you get free rent and you don't have to pay for a mortgage. It's actually a great, great idea, because if you're looking at a home, say your home is $500,000 and it's a duplex, well, you got a second tenant in there that's paying the mortgage, $2,500 a month, and you have your mortgage, and you pay whatever, and they pay for most of the mortgage, or if not all the mortgage. Now, before you go, once again, this is just one aspect of the asset quadrant. I talk a lot about the asset quadrant. The wealthy have 7 streams of income from all 4 asset classes. Now, you can learn more about the asset classes on my blog. I will put a link for my blog there. One of the particular posts talks about stock market investing, but I go into more of the asset quadrants within that post. So if you really want to find all of that, go ahead and check out that blog. But I will tell you, in order to find true financial freedom, you need to create a business that can become turnkey. This is a cash flow generator. It is the one aspect of the asset quadrants. The other 3 pieces of the asset quadrants are more like investing. So you got real estate, you've got paper assets, and you've got commodities. Those investments can create passive cash flow, but so can a business, a side hustle. These are all aspects of how the wealthy have 7 streams of income. I do have a program that I'd be more than happy to talk with you about. It does offer a coach on day 1, a mentor that helps you walk through the process in growing your online presence, your business, your online business, digital marketing. We're not talking about e-commerce or drop shipping. This is digital marketing. So check it out, please. If you have a chance, let me know your comments below. Partner up with me, clicking on it. There's going to be a description. There's going to be a little link in the description field. So it's actually the program that I started when I wanted to get online. So we show you exactly how to build a business from day 1. I had very, very little experience in digital business when I first started. It'll help you choose a niche, set up the business, select offers that you can promote. Also, on top of that, you're going to get coaching and mentoring day 1. I can't tell you how paramount mentoring and coaching was for my success. Maybe I'll do a video on that, because coaching and mentoring is the number 1 most important thing. Remember, building at secondary or third or fourth source of income is the best way to invest in ourselves that can potentially fund other investments. Please remember to subscribe to my channel. Shoot me a comment. Let me know what you liked, what you didn't like. Be more than happy to reach out to you. If you have any questions, I'm happy to help you on your journey. Hopefully you can get some good information from this real estate strategies, and then also start a business. Thanks so much. Cheers to your success. Talk to you soon.